Very good morning to you all. We could have been a little bit less conservative with our TP on Kajen. We actually did rocket quite hard above our TP, but the logic there was that we were going to raid those stops, and we did, and it was a good trade. We could have actually got a 3.3R, but we didn't really know where it was going to stop, so we just took profit there, which is fine. So it's made us a profitable week. We also had gold as well, but that's not added to the sheet profit and loss, just because we never have included gold. But you can see, your weekly open was 1996, so you're looking for a retest of the weekly open. It's like a little a juggling of positions, and perhaps this could have been like a fake move just to entice retail shorts potentially, and we had to come down to test weekly open. Now your stop loss was the 200 moving average, which coincided round here, and we did propel higher. So this was a fantastic trade as well, and it was a TP at 2020 that we're creating some supply. So that was a phenomenally accurate and logical trade based on the weekly open and to target SLC. So this was a Patreon video analysis. So today we were not going to have a Patreon video because we've got CPI and things are just going to rubber band and go. It's going to be quite erratic. So no Patreon video today, but we'll have one tomorrow, but just not today. But this is based on the weekly open to SLC logic, and that was a fantastic trade. So let's have a look at the indices. And well, gold, I guess. But the thing is, this move here, it's not necessarily them going long, but it could be a reduction of shorts. If you remember, 2020 was the stop loss cluster. So when we hit the stop loss cluster, we're going to see less shorts, right? Because it's gone to the SLC, it's gone to the liquidity. So that move here is probably not necessarily more longs, but less shorts. And it coincided with our punishment zone exactly. So let's draw this box. Look how freaky this is. Absolutely freaky. So very, very, very powerful. Look at the reaction there. So yeah, you can say whether or not that's a coincidence or not, but we created a supply because they've gone long. So who has to counter that trade? It has to be the banks. Someone has to take the other side of that transaction. If you're selling something, someone else needs to buy it. And if you're buying gold, then someone has to sell it. Okay, so that's how it works. And so this was a punishment zone, and the reaction of that punishment zone, and probably took out stops there, to be honest with you, because it's a big move. And then they started to sell it here. Had a wick, nice healthy wick into the demand. Up we come. So back to where they'd started. So punishment zone, stop loss cluster, liquidity probe, and then they started selling that stop loss cluster, liquidity probe. And we're probably going to do this for the rest of the week. So we're going to go from stop loss cluster to stop loss cluster. So that was still very, very happy. It was a great trade. I don't know if anyone took it. I'm not sure. But if you did, you've done really well. The stop loss was quite close. It was a $5 stop. And I was saying that we should move the stop ahead at entry because we've got CPI today, and we didn't even need to really because it just carried on higher. And it was a decent logic of the weekly open. So it was a fantastic trade. This is one of the best trades of the year so far from the logic and the reaction of that, that weekly open and the demand that we created. I have to remember there has to be someone else on the other side of the transaction. And this is why sentiment is so powerful. If you've got like 10 million people doing one thing, there has to be a huge size on the other side of that transaction to counter that bias, okay? Let's go to S&P. And I'm out today, by the way. No trades. So I'll be back tomorrow. Sideways on the S&P, there's anything to be said there. Resistance here, 4140. Above 4140, it's going to be a lot easier, but currently we're just chopping. So there isn't anything to be said there. That's why I put a ZZZ, like a snooze thing. There's nothing going on there. It was 30. So they have gone long, so we probably should be falling. And this is that diagonal break, and it looks like we're just climbing higher, aren't we? So it might ignore the sentiment. They have gone long, so we should be falling. So yeah, it's the same with DAX. I think DAX is going to be rising, even though that these guys are going long. So it might be a little payday for these bulls. So they've gone long. It might just be a little payday today up to the CPI, and then we've got the FOMC minutes as well later. Right, so could be a bit of a payday scenario there, but technically, we are strong. Sentimentally, we are a buy. 30% long. So there are a lot of bears in this market. So you can really argue it might just come up just to raid their stops a little bit more. DAX, and then you'll probably see that the sentiment is going higher. Yes, they are. They've gone long, but we've still got that punishment zone. Where the US 30, we were above the punishment zone. We still have this intact, and you can see how we're within that zone there. So just a quick one there, just to summarize. Gold was phenomenal. It was an amazing trade, one of the best trades of the year. I don't know if you called it. I'm not sure if you did. If you did, that was great. Or perhaps if you're watching the videos on YouTube and you took that trade setup, if you did, that's fantastic. As long as someone took it, that's okay. So I don't get much feedback, so I don't know if anyone did. And the US indices slightly sideways, and we could probably be falling ever so slightly on DAX and US 30, in so much that they've gone long. But we have to remember the big picture is that it is a buy. But we are gone to extremes a little bit. We went to extremes here, didn't we? 16% long. It's a bit crazy. It's a bit skewed, so be careful, and I'll be back tomorrow.